Bond meaning and types. Bond meaning and types. Bond is just like debt but at fixed time period and not treated as long-term finance. Having 3 to 5 year maximum year of time. Bond is loan in form of legal instrument with payment of fixed interest after fixed time period. It treated like debenture but having difference of maturity of bond. Bond for short term whereas debenture for 10 to more than. Company issued debenture for taking loan for long term, whereas bond is for taking loan for fixed time. Bond are mostly issued by the government for seeking fund from public or institution. Definition. A bond is a form of written documents in which borrower give promise to lender to paid interest after the completion of the time. Bond is debt investment. When you buy a bond the time you invested a money through lending fund in a corporation, government or government agency that issue or sell bond to public. Bond are also known as fixed income investment because you earn interest through invest at a specific rate on regular schedule until the maturity date. Some investor buy bond in a primary form making income, while other investor trade bonds to realize a profit when they sell. Risk related for bond. For the company or government institution risk related to bond is lowered in comparisons of stock. If they are aware of pitfall to safeguard interest of risk. The following are risk related to bond. Interest rate risk. Due to change in market price interest rate paid by company is also changed. Inflation risk. Government issued loan during time of inflation to public with lower rate of interest paid to the public in future time as fall of market price. Credit default risk. May credit worthiness not that willing to pay interest. It depends on the company is associated with the debt. Hence many times risk associated with credit default payment while issued debt certificate. Liquidity risk. Bond not easily issued by company when they're in market is thin line and market bear difficult times. Such situations selling of bond is not easier. Types of bond. Government bond. Government bond or sovereign bond issued to investor for supporting government spending. The payment of interest periodically called coupons. Sometime payment is in discount. Treasury bond. This is also a government bond issued by government bodies by paying fixed rate of interest even for 6 years or for 10-year rate of interest remain same. Convertible bond. Bonds are issued by corporate sector or company to public which converted into stock of company. Secured bonds. Secured bond issued on the basis of collateral assets, securities. In case of default payment borrower paid collateral assets or company used borrower collateral assets on any default payment. Other types of bonds. Fixed rate bond. Organization government and corporate issued bond with fixed rate of interest. This type of bond even resist recent market price. Bearer bond in this no name mentioned on the certificate of bond those who possession claim the interest by documents. In case misplaced or lost of certificate whoever holding a document of bond claim interest. Floating bond. In this bond types there is no fixed charge. The amount of issued each bond varied from each another. Rate is based in the recent conditions of the bond. Zero bond. Government or corporate organization who issued bond without any payment interest rates. They only liable to pay principal amount. Perpetual bond. Organization issued bond without any maturity date. This type of bondholder earn interest throughout the year. Inflation-linked bond. Bond which is linked to inflation known as inflation-linked bond. In this bondholder attain lower interest rate than fixed interest rate.